Alright, welcome back. You're watching First Trades live on ET now. It's a very okay start for Indian markets. Nifty futures, they're still holding at a premium. Bank Nifty is down by about 48 points. Nifty is just going nowhere. We have consolidated on Thursday, we have consolidated on Friday, and Monday morning also we are consolidating. Like I mentioned, markets clearly are at a crossroads. For those who track market fundamentals, well, the fundamental picture is not strong. In fact, with each passing day, the fundamental risk is only getting higher and higher. But since there is so much of global liquidity, for those who trade momentum, they will have to ignore the fundamental turf. As of now, technically the update is that Nifty is struggling to cross that mark of 5350. If we fail to really convincingly go past that hump of 5350 somewhere in the near term, then some amount of complacency will kick in. But as of now, markets are clearly leaning towards long side. Individual stocks are holding on. So if it was Reliance last week, today it's ONGC, and then apart from ONGC, Maruti is also chipping in nicely. But let's connect with Sam Ghosh, Chief Executive Officer with Reliance Capital. Sam, good morning. Thank you for joining us. Sam, give us some color on business and the profit drivers for Reliance Capital for the quarter gone by.
If you look at our turnover, it's grown positively. So we have had about 17% growth in terms of turnover, and to about 1,700 crores. And our profits have also gone up by about 30% to about 45 crores. So we're very pleased that overall, compared to last year, this same quarter, we have grown. If you look at our net worth, also it's remained at about 11,750 crores. So it's we are one of the largest or the largest in the financial services sector in terms of net worth. And our net debt to equity ratio has come down to about 1.64%. So again, that's a very healthy sign. If you look at business by business, Reliance Capital Asset Management, funds under management at about 145,000 crores in total, which includes our mutual fund as well as EPFO money as well as our other funds, makes us the largest in terms of assets under management. That has also grown. If you look at purely in terms of mutual funds under management, we're at about 80,000 crores. And that again, compared to 31st March, has grown from about 75,000 crores to 80,000 crores. However, compared to last year, where we were at about 1 lakh crores, we have obviously come down. And that will gradually, this year, if things continue, we'll continue to grow in that front. In terms of profitability, it's remained fairly flat in the asset management business, primarily because of the reduced AUM in the mutual fund part. If you look at our life insurance business, life insurance, again, there's been a significant increase in profits, nearly 140% growth in profits to about 19 crores. We obviously haven't taken into account our the traditional portfolio's profits of about 90 crores, which will be taken into account by the end of this financial year. So there's a balance yet to be taken into account. If you look at our commercial finance business, again, growth in terms of AUM has been slow. We have had about 6% growth. Primarily, this has been deliberate because of the market conditions. However, profit has gone up to about 66 crores and nearly about 20% growth in profits. So that has been again a good performance by the commercial finance business. And then moving on to our broking business, that also has shown about 25% growth in terms of profits. This includes commodities as well as equities broking. General insurance business, we showed a loss last year of about 30 crores. This year the loss has come down to 20 crores, and this 20 crores is primarily due to the motor third-party pool provisioning requirements, which the IRDA wanted us to provide for this financial year and next financial year. So quarter on quarter we have to provide for that. However, if you look at the core business itself, it has shown profits.
Sam, give us some color on your profits and new business premium growth in the life insurance business. What's the outlook on the same for FY13?
Yeah, if you look at our business for this last quarter, we obviously had a reduction in premium, new business premium growth. Like the industry itself, it has shrunk slightly. But going forward, we believe that new business premium growth will start increasing and compared to the last financial year. And the next 2-3 quarters, we'll see that growth. In terms of profitability, we'll see substantial increase in profits compared to last financial year. So last year, I think we closed about 370 crores profit. This year we expect at least 30 to 40% growth in terms of profits, and that is already being reflected. In terms of number of policies we are selling, that again was about 10% reduction compared to last year, but we expect that to grow in this financial year. We have kept the number of branches at about 1,300 crores. We have 1,300 branches, primarily because we still feel there's substantial business in the smaller towns. Agency force has remained at about 120,000, and So we expect them to become more and more productive as they go along, and we're trying to train them more and more in the traditional product lines.
Sam, what is your market share in the life insurance business, and at what levels do you target to grow your market share for FY13 and then for the coming financial year, which is FY14?
Today our market share is about 4%, and we expect the market share to grow by the end of the year to about 5%. So gradually we want to increase that, primarily because we are focusing on traditional business. We are not focusing on group business, which is large ticket business, but in terms of margins, they're very low. It's better to focus on individual policies and individual premium, where you get higher margins, and obviously that it's smaller ticket, but it takes longer to get that business, but it's a better quality business, and it remains with you for a much longer period of time.
Give us some color on how has your general insurance business been this quarter in terms of premium growth, market share, etc., and what's your future outlook there?
See, if you look at, though there's been a slowdown in the economy, the general insurance business industry itself has grown. And we've also grown in this quarter.